Why trading small is the real secret to making big money. There's an old saying in trading that sounds almost like a joke the first time you hear it. There are old traders and there are bold traders. But there are very few old, bold traders. Most people hear that and nod politely, then ignore it completely. Because deep down, we're wired to believe something else entirely. We believe that bigger risks lead to bigger rewards, that if you really want to win, you have to swing hard, that playing it safe is for people who are afraid. And in trading, that belief ruins more accounts than bad analysis, poor timing, emotional mistakes, or even outright gambling. Not combined, individually. The aggressive approach feels right. It feels logical. It feels brave. And that's exactly why it's so dangerous. Today, I want to break down why trading small is actually more profitable than trading big. Not in theory, not in textbooks, but in real life, where emotions, pressure, time, and psychology matter more than perfect setups. We'll look at why aggressive trading keeps failing, why smart people keep falling into the same trap, and what truly separates the traders who last from the ones who disappear. And we're going to start with the rule almost everyone hears, and almost everyone ignores. Rejection 1 to 2% per trade. You've heard it before. If you're being honest, you probably rolled your eyes when you did. 1%? 2%? That's boring. That's slow. That's for people who are scared, to crawl forward inch by inch. You got into trading to make real money. And that mindset is exactly where the problem begins. Because here's what aggressive trading actually does to you. Let's say you're risking 10% of your account on each trade. You're confident. You've done your analysis. You know this setup is good. Now imagine you hit a rough patch, 5 losses in a row. Something every trader experiences sooner or later. You're now down almost 50%. Half your account is gone. But the financial damage is only part of the story. The real damage is psychological. You're no longer trading to grow your account. You're trading to get back to where you started. And that is an entirely different mental game. The trader who risked 1% per trade takes the same 5 losses and barely feels it. They're down 5%, they're annoyed, maybe frustrated, but they're still thinking clearly. One trader is in survival mode, prosecuting, the other is still in offense. That single difference changes everything. And here's the math that lose 50% of your account. You don't need 50% to recover. You need 100%. You have to double what's left just to break even. Meanwhile, the trader down 5% needs a 5% gain to recover. One needs a miracle. The other needs a decent week. This is why position sizing matters more than almost anything else in trading, and history proves it. Consider the story of Jesse Livermore. In 1929, he became one of the most legendary traders of all time. He shorted the market just before the crash and made the equivalent of around $1.5 billion in today's money. He was famous, respected, studied. People believed he had cracked the code. 5 years later, he was bankrupt. Think about that for a moment. How does someone go from moving entire markets to losing everything? It wasn't because he forgot how to read charts. It wasn't because the market suddenly became unfair. He got reckless with position sizing. He started betting bigger when he felt certain. He confused a winning streak with invincibility. He decided the rules no longer applied to him, and the market humbled him again and again. Regained, he died. He wrote something chilling. "My life has been a failure." That's not a strategy problem. That's a survival problem. And it's the same problem that destroys retail traders every single day. Here's why aggressive trading is such a powerful trap. When you risk big and win, Your brain floods with dopamine. You feel brilliant. You feel unstoppable. And you want that feeling again. So you size up. Then you lose. Flushed. And here's the cruel part. Losing hurts far more than winning feels good. Neuroscience shows the pain of loss is roughly twice as powerful as the pleasure of gain. So now your brain is screaming at you to fix it, to recover immediately, to get back to even. You stop being patient. You stop being selective. You start revenge trading. And this is how most accounts actually die, not from bad strategies, but from emotional decisions fueled by oversized risk. Trading small removes you from this nightmare entirely. When you risk 1%, losses are manageable, annoying, not devastating. Wins are satisfying, not intoxicating. You stay rational. And in trading, rationality is everything. Let me tell you about two traders I knew. They started at the same time, same capital, same education, same setups. Trader A wanted results fast. He hated his job and saw trading as his escape. He risked 5% per trade. 6 months later, his account had dropped from $25,000 to just over $8,000. Constantly, barely sleeping, always checking his phone. Trading wasn't freeing him, it was consuming him. Trader B took a different approach. He risked 1.5% per trade. Trader A mocked him for it, called it boring money. But Trader B didn't care. 6 months later, his account was at $31,000. No massive wins, no screenshots, just steady growth. More importantly, he slept fine. His worst drawdown barely registered. A year later, Trader A quit, burned out, convinced trading was rigged. Trader B is still trading today, years later, with a 6-figure account and a life he actually enjoys. Same market, same strategy, different position sizing. Then came March 2020. Markets went insane. 20, 30, 40% moves in days. Stops blown through, slippage everywhere. Aggressive traders were wiped out in hours. Traders risking 1% took hits, but they survived. And survival mattered. Because the crash didn't last forever. The recovery that followed created enormous opportunities, and only the traders who survived were there to take them. This is why professional traders risk so little per trade. The best in the world, managing millions and billions, often risk less than 1%. They're not afraid. They're experienced. They understand one fundamental truth. Staying in the game matters more than any single trade. Here's something most people don't talk about. When you take a massive loss, you're not just losing money, you're losing time. Time spent recovering, time not compounding, time missing opportunities. Lose half your account and it can take years to recover. Years where your money isn't working for you. Aggressive trading doesn't just cost money, it steals years of your life. But what about the massive winners? People ask. What if I catch a trade that goes 10-1? Here's the truth. You'll never make it to that trade. The losses along the way will eliminate you before you ever get the chance. Big winners only matter if you survive long enough to take them. I watched this happen in real time. A trader in a group started with $50,000. He did well at first, grew it to $71,000. Then he got confident, started risking more, 8%, then 15%. Within 6 weeks, his account was under $3,000. He disappeared. He wasn't bad at trading. He was bad at survival. And that's the pattern. Big risk leads to big losses. Big losses lead to desperation. Desperation leads to catastrophic mistakes. Safe traders never enter this spiral. When no single trade can hurt you, everything improves. You execute cleanly. You follow rules. You think clearly. Your confidence builds slowly, but it's real. Over time, this psychological edge compounds just like money does. And that's why the traders who actually become wealthy aren't the ones swinging for home runs. They're the ones who stayed in the game long enough for compounding to work. Real wealth isn't built in weeks or months. It's built in years of consistency. Trading small isn't exciting. It won't impress anyone. It won't make for flashy screenshots. But it works. And in the end, working beats exciting every single time. Because markets don't wait for you to rebuild. Opportunities happen whether you're ready or not. The traders who survive are the ones who are there when it matters. And survival always starts with one simple decision. Trade small.